Hello friends, Stacy Anfinson here with your Tour Report market update. Today we're going to take a look at what happened in 2025, our year-end wrap-up as we head into the end of January this year. Start off as usual with our population graph. It is important to always remember that we have a growing segment of the population. Sadly, census population is lagging. Nobody has any 2025 census data yet, so we have revised 2024, but still, whatever the number is, about 102% compared to where we were in 2007. So kind of keep that population in mind when we go over our inventory metrics. So these are annual new listings. Remember, this is not MLS, Storify MLS as a whole. This is just the 4 counties of Wake, Durham, Orange, and Johnston. So if you see 2025 versus 2024, annual listings, that's both new and resale, were up 14%. If you look at 2023 and 2024 and 2025, you will see that this was the third consecutive year of that. But if you look back, we're at 36,000 plus or minus. In 2025, we are still well below everything between 2016 and 2021. So even though we have a big jump in inventory, still well beyond where we were in prior years. Sorry about that. Now, end of month inventory. This really gets a lot of press. The red line is total inventory. The blue line is resale inventory. Resale inventory end of December of this year compared to end of December last year was up 78%. Once again, go back to that population graph. If you look at total inventory, December of 2025 versus December of 2007, we're down 53%. So in spite of the tremendous percentage increases, it's just we still are lacking in terms of inventory where we were from a historical standpoint. Now here's a chart that really the national media jumps off on. What I did was I summed all the listings on a monthly basis that had a price drop listing in that month. So gives you kind of a context for what happened during the year. 2025 versus 2024, 17% drop, 17% increase in those listings, which I view as a positive. Once again, as you heard me say numerous times, if nobody dropped their price to where the market expects them to be, we'd have a stuck market, and that wouldn't be any good. But once again, going back to the COVID years, 2020 and 2021, it is just stunning to see the low amount of inventory and the low level of price dropping. I mean, that's not a typo in 2021. There was only 1,073 listings during the year that had a price drop, and now we're up to 37,256. So always like to throw those COVID stats in there just for shock factor. Annual closed listings, a modest increase, up 1%. Comparing this 2025 with 2024, if you go back comparing 2025 with 2021, we're still down 29%. Lots of reasons for that. You can blame inventory, you can blame prices, whatever you want to blame, you'll blame. That's fine, but I would look at it as a positive. Once again, if you go to 2023 and 2024 and 2025, it's the third consecutive increase in annual closed listings. So we like that. Good. Also like increasing prices, and we also like them at like 1 or 2%, which is where they were historically. Once again, go back to the COVID years, 2020, 2021, and 2022. It's almost $130,000 increase comparing 2020 and 2022. And that's really the crux of a lot of the problems if you want to get into the affordability discussion. And that was obviously driven by mortgage interest rates, and those historically hopefully never see them again level of interest rates. So this year we like a 1% increase. Sellers may not be as happy with that. Some sellers are actually underwater compared to what they paid for it a couple years ago, but that's really a return to historical norms with that. December months of housing supply. Once again, we take it all the way back to 2007, 2008. We had a 13-month supply, which just seems like, is that a typo? But it wasn't. Those of us that have been in the business a long time can see, yeah, we've had some lean years. But if you go back to 2016 to 2025, it's been an undersupplied market, and that's really the number one reason why house prices have increased. Whenever you have an undersupply of a thing, the price of that thing is going to go up. Average days on market, Again, national press is freaking out about this, but if you look at 42 in December of 2025, it's actually lower than it was in 2024, which is great. And if you go all the way back to 2012, it's 122. So not freaking out about increase in days on market at all. Now, here was the interesting part about 2025 in terms of mortgage interest rates. Everybody kind of screamed about, hey, we want them lower, but nobody really predicted that they were going to happen. And when you look at where we were in January, which is a sniglet over 7%, and where we were in December, which is 6%, a 1% decrease during the year is just, it's only happened a couple times in my history of doing that, and that was really the COVID influenced years. So that's really what's going to show you this next EKG chart, which is a 2025 monthly principal and interest. So what I did, I took the average sales price with the national average for a 30-year fixed mortgage rate, and you get a monthly PI. It started out in January at 34.43. It ended up in December at 32.83. So if I ask you the question, did house prices go up and monthly PI go down, the answer is true, which is a little counterintuitive. If you really want some shock, look at where they were in August. If you bought a house in August and you bought a house in December, in theory, the house prices went down on a monthly basis 9%. So whether you agree with this methodology or not, I like it because people buy things on a monthly, what does your iPhone cost per month? All these things we have on a monthly basis. So, what can you afford as a monthly payment is really the question that mortgage officers ask, or buyers ask mortgage officers. So pretty interesting thing to see. And it just shows you, once again, if interest rates go down and house prices only go up 1%, then from a monthly standpoint, house prices are actually going down. So key metrics for 2025. Number one, 2025 annual new listings added was a third consecutive increase. That's great. 2025 annual median sales price was the highest on record. However, as just mentioned, the monthly PI dropped comparing December and January. September and November were the only months where there was a balanced supply of housing, which we had gone years without a balanced supply, not even 1 month. So we had 2 months in 2025. The other months were an undersupplied category, which is once again is favorable for house price increases. And once again, the increase in price drop listings were viewed as a positive. Sellers are losing some pricing power. Now, what am I looking for this year? Hey, where are interest rates going to go? Are they going to keep going down? Your prediction is as good as anybody else's. So we'll just have to wait and see what's going to go on with that. Continued inventory trends increasing. Is the silver tsunami starting to pick up steam? That's something we're going to be paying attention to. Number three is really what I'm curious about, price direction of new home listings. There's a lot of price cutting going on in the fourth quarter. And just like in retail, when they cut the price of a sweater, they put new sweaters on the shelf. They're going to ask the price, which indicates, they're going to make profit on it. But the question I have is if you couldn't sell the price at that level with those interest rates, how are you going to sell them at what you want to sell them for in the first and second quarter? So very curious to see with that. As you know, new construction is the elephant in the room, a very large percentage of market share in terms of closed listing activity. Hey, appraisers out there, we're really, super excited about the new Fannie Mae appraisal form 1004. Will it extend closing times? You know that appraisers are like everybody else. We don't like change, and this is a huge change for us in terms of information that's being requested by Fannie. It's got to go into effect in October. It'll probably be rolled out slowly, but will you start getting lenders saying, hey, we need extra time from the appraiser on that? So I'm not sure how it's going to affect me, but I'm not sure how you are aware of that coming in, but it probably will have some influence on your business. So, hey, this is a long one. I appreciate it. Just under 10 minutes, but we had a lot to talk about. As always, love the fact that you listen to this. There's my contact information. If you like this, please click the like button. If you want to subscribe to it, please subscribe to it. And we will see you next month.